Yes, I know. It's right to stay humble. It's right not necessarily to brag about prior successes, but I still think it's important to point out what has been said in the past. What was the prediction about Ethereum relative to other asset classes at particular points in time? Now, I don't want to talk about others. I'm simply just pointing inwards, showing what this channel here has showed. Now, just because the calls in the past have been right doesn't mean that they have to be correct in the future as well. It's always a question, how much of this is just pure luck and how much of this is actually skill? Nobody can truly say that. But I want to share a chart that I've been discussing on this channel pretty much on any Ethereum video in the last years. And that's the Ethereum dominance chart. How much of all of crypto or of cryptocurrency's market cap is currently in Ethereum? And this tends to trade in a range between 7% and 21%. So when this is high, a lot of crypto is in ETH. When this is low, then Ethereum is, comparatively speaking, rather cheap. So have a look at this video over here that was published in April 2017. Are people sleeping on Ethereum? And apparently many people missed the boat. Here's the follow-up video. We bounced exactly at the bottom that we formed in September of 2019, and now it continues, and again we're exactly at this resistance point now, and we are bouncing off that resistance. Now, I don't just want to talk about technicals, because obviously behind this rally is a fundamental cause, right? There are the Ethereum treasury companies, there's the purchases through the ETFs, so there is a real story behind this. But it's important to know that very often the magnitude of those stories is determined by historical trading ranges. If everything is historically cheap, even negative news don't have that much of an impact on the price anymore. But if you're already cheap and then something positive comes along, the rally can be massive. And I dare to predict that once Ethereum dominance is close to 21%, that then even the most bullish news on the planet won't bring it to 30, 40 or 50%. It's very unlikely. But let's now discuss what's likely going to happen in the future. Let's zoom into this area here marked by this square. We're looking at the 4-hour chart. And since the 14th of August, Ethereum dominance is suddenly falling. The big question is, since capital is now rotating out of Ethereum again, since people are taking profit, where is this capital actually flowing to? Because that's fundamentally how crypto works. There is the capital in the ecosystem, and it flows from Bitcoin to Ethereum to Solana to the smaller altcoins to the stable coins. If currently capital is getting out of Ethereum, who's benefiting from this? And could this trend potentially continue? Is this maybe the chance to buy Bitcoin or Solana or the alts, etc.? Let's have a look at the capital flows. Because the reason why people are currently taking profit seems to be quite clear. We got all this hype around the strategic Ethereum reserve, right? The treasury companies that are purchasing since the beginning of April of this year. That's the green area over here. The blue area is the ETFs. The Ethereum market cap since those purchases started increased by 285 billion. Those treasury companies, however, only bought 12 billion. So the vast majority of this rally is not the direct purchases by Bitmine or Sharplink. It's actually speculation that there will be more purchases in the future. So the short-term speculative money is currently front-running the future purchases of those treasury companies. The vast majority of the price appreciation is not due to the direct buying of the treasury companies. It's in anticipation of future purchases. And the big question is, how quickly can those Ethereum treasury companies continue to accumulate Ethereum? We do not have that much track record yet. Yes, it's accelerating recently, but who knows how this will continue? Because have a look at the history for Bitcoin. Initially, Michael Saylor bought a lot of BTC, but then as the Bitcoin price didn't go up that much anymore, Michael Saylor had to put a halt towards future purchases. And only 3 to 3.5 years later, there were subsequent purchases again as Bitcoin hit new all-time highs. So really, those treasury companies are forced to buy high. They can't buy low because that's when the leverage ratio is the highest. That's when the collateral is worth curve the least, so they can't just buy more and more as we dip. They have to buy as the price is already elevated. And so in a way, those treasury companies work a little bit like the retail investor in the past, right? Retail investors tend to get excited when prices are high. They hear about the new all-time high of Bitcoin or Ethereum in the news, and then they're wondering, should I also join that rally? But sometimes that means waiting for a while until the next bear market is over. The same thing that happened to MicroStrategy and Michael Saylor. But again, let's focus on where this money is currently flowing. Why is the Ethereum dominance going down? Who's the beneficiary here? So in the last 5 days, the Ethereum dominance dropped by roughly 5%. The Bitcoin dominance since then went up by 0.8%. So Bitcoin slightly benefited. Here is Solana. Solana's dominance did not go up. It also went down by 2.3%. So there was no money flow further up the risk curve. One might expect that over time the market gets more and more risk on, right? Bitcoin first appreciated, now the second layer, Ethereum appreciates as well. Maybe now people are rotating over to Solana after Ethereum has already rallied. But this is not what we see yet in the data. Solana has not benefited from this retracement in Ethereum. What about the altcoins? So this is now the others dominance. There's also no rotation here. The altcoin dominance went down by 0.8%. So really, what seems to be happening is that the market is simply trying to take profit, is simply going more risk off. And we see this especially in the stablecoin dominance. So how much of all of crypto is currently in stablecoins? If people don't want to get any risk exposure at all, they just want to take profit, they just swap from Ethereum to the stables. And that's what we have mainly seen. This is the stablecoin dominance, and since the Ethereum dominance corrected, that number went up by 6.6%. So as Ethereum is hitting this historical resistance and tends to go down relatively speaking, that capital is moving mainly into the stablecoins and partially into Bitcoin. It's not like the market is heating up further and further, tries to find new opportunities, tries to sell the Ethereum into Solana and into the altcoins. This is not what we're seeing. We're seeing the exact opposite. The money is flowing into risk off. And so that then begs the question, what's going to happen from here? The 14% mark was a great turnaround several times in Ethereum's history. Now we are bouncing off exactly that level one more time. Are we going to 21% or are we going to 7%? My impression is that the market has overreacted to the treasury story because again, the treasury companies only hold 13 billion. The market cap went up by more than 200 billion. So there is a lot of short-term leverage in the market. And it appears as if the market is not yet hot enough to justify a rotation into even more risk on assets. It seems like we are somewhat at an equilibrium, rather higher on that end, and now things tend to cool off again. And this is where so many people got it wrong. Many people thought that this is actually now the start of an altcoin rally because the altcoins also went up together with Ethereum. But the altcoins underperformed Ethereum. And even now, as Ethereum is dropping, the altcoins continue to do worse. So really, this is not a rotation into risk on just yet. This is just a heated Ethereum market that cools off again. My base scenario is that Bitcoin dominance will reach 73% again. Historically, we always saw the altcoin season once the Bitcoin dominance was above 70%. This happened 3 times and currently we are not there yet. We have seen a decline in Bitcoin dominance, very similar to what we saw at the end of last year. That was caused by Solana outperforming because of the Memecoin trading. This time Bitcoin dominance is going down because of Ethereum outperforming. But I've got the impression that a V-shaped recovery, very similar to what we saw after the Solana hype, will happen one more time for BTC. I think it is wise to rotate Ethereum profit into BTC. I think Bitcoin is now comparatively undervalued, at least relative to Ethereum. It's very unclear what the future of the Ethereum treasury company purchases will be. There's already a lot of anticipation in the market. And for Bitcoin, we've got a much cleaner picture. Here we clearly know that all kinds of entities are accumulating long term. They're accumulating at the same pace in the last months compared to, say, 1.5 years ago, even though the Bitcoin price has doubled. So it's now double the amount of dollars that are flowing into the space. The demand for Bitcoin measured in US dollars by those treasury companies has grown to the same degree as the Bitcoin price. So this is a very healthy development. The Bitcoin acquisition is not slowing down. Will it slow down for Ethereum? That's still so unclear. There's just so much risk, there's so much hype, there's so much market cap increase in a short period of time. People are already starting to take profit. Are we going to go all the way down to 7% again? I doubt it. But is it possible that we go down in Ethereum dominance to 12 or maybe 11%? I think that's very much realistic, because something has to give when we expect Bitcoin dominance to bounce again. And of course, that capital will come partially from Ethereum. It will also come partially from the stablecoins. Now, what we're seeing over here, that's the others dominance. So how much of all of crypto is currently in the altcoins that are not in the top 10? And that's currently close to 8%. And since the beginning of 2022, this is actually going down. And there's a fundamental reason for the altcoins to perform that poorly. And by the way, I expect this to continue to go this way. What we're seeing is a concentration of capital in the heavyweights. So in Bitcoin, Ethereum, and Solana, due to the ETFs and due to the treasury companies. Here's a chart you've probably never seen before. This is the Bitcoin market cap plus the Ethereum market cap plus the Solana market cap relative to the market cap of the smaller altcoins. So when we look at the top 3 cryptocurrencies and we compare them to the smaller altcoins, we can see a clear trend. The big, potentially less risky cryptocurrencies outperformed the risk on assets, the small micro caps, by more than 200%. And for some specific cryptocurrencies, that outperformance is even more pronounced. This here is Balancer relative to Bitcoin plus Ethereum plus Solana. So when we just look at the last 2 years, this outperformed by more than 1,200%. And that's no coincidence. This happens because of fundamental reasons. It's because in this case, the Balancer supply, the supply of the BAL token, went up massively because of token emissions, because of usage of the platform. So platform usage gets incentivized by an expanding supply, and that expansion in supply cannot keep up with the demand, thus the underperformance. Thus, all those bigger cryptocurrencies, Bitcoin, Ethereum, and Solana, did so much better. And so this is just an example of how the mechanics in crypto work, right? Have a look at this again. This is the Balancer supply. It keeps on growing because of liquidity mining, and those mined BAL tokens get sold over time. And we've got these effects regularly in crypto. There's an entire website called Tokenomics.ai that's just focusing on the token emissions of various altcoins. Every single week, we see roughly 800 million worth of tokens hitting the market. And the problem is that all of that supply has to get absorbed by the retail investor. And it has to get absorbed faster than the purchasing rate that we see through the ETFs and through the treasury companies of those larger caps. And long term, that's very unlikely going to happen. The issuing rate is just too high. And that's just of the tracked tokens on this website. And so I'm trying to make money where there are market inefficiencies. And I do believe that the altcoins are still inefficiently priced in the way that there's way more selling pressure than there is demand. 800 million is way too much. If the altcoin market suddenly drops by 50%, then this will only be 400 million. And that could get absorbed a bit better. But right now, I really don't see the case how the altcoins can outperform the major cryptocurrencies. There won't be a treasury company for Floki anytime soon. And so the way I make money with those inefficiencies is by betting on rising prices of Bitcoin, Ethereum, and Solana. And at the same time, I bet on falling prices of all of the crappy altcoins. The altcoins that have a very quickly expanding supply that tend to underperform the major cryptocurrencies constantly. I followed this strategy now for roughly 4 years. So this is my personal performance. It's a monthly chart I've pulled out of Microsoft Excel. And had I just dollar cost average into Bitcoin, I would have gotten this light gray return over here. Instead, because I also bet on falling prices of various altcoins, I got the return here in black. I did this mainly with borrowing and lending platforms like Aave, etc. But I recently switched over to perpetual futures, and that also worked pretty well. So I did this here with my personal capital as a first pilot project and turned roughly 40k into 60k in just 2.5 months. And this is where where I think I differentiate myself with this channel from all the other crypto channels. Most other crypto channels are not willing to share their actual performance. But I didn't want to stop there, right? If I make money, how can you make money with the same strategy? It's not always that straightforward. So I opened a capital pool 1 month ago. And lo and behold, this pool is also appreciating quite quickly. Not as quickly as the initial test. So annualized, this gives us 61%. But still, the premium members of this channel that are invested in this pool are currently making exactly this return. Now, because there was so much demand for this capital pool, I had to close deposits. So I will continue trading with that pool until end of the year, and then open another one at the beginning of next year. But until then, you can still copy my trades. So I share every single trade that I make over here in the Gerhard's trade channel. So for example, over here, I'm not sharing now the recent trades, but here on the 23rd of July, I bet on falling prices of WorldCoin, and various members copy traded and made some money as well. And so I was thinking, how can I set up this membership in a way that it's as risk-free as possible for you? And I came up with the following. If you decide to join the membership here, you just have to watch 2 videos. The first one is this one here, using perpetual futures on Hyperliquid to bet on relative valuations. The second video is over here, risk management with relative valuation bets. So that's roughly 1 hour of content. You're simply just following the instructions explained in those 2 videos. Afterwards, you're joining all the premium groups. Then I get a notification, and then I will send to you the one trade that you just have to copy trade, that I have the most conviction in. If with that trade you are not making money after the first month of your membership, then I will refund the entire membership fee to you. So this is the trade that I will share with you. It's not the balancer trade, it's something else. It's something that has more upside potential. And since beginning of the year, it went up by 350%. And yes, there is some potential risk for me that you might not end up making money in the span of a month. But I think the risk is manageable, especially given that the performance recently is accelerating again. And the reason for this outperformance is the exact same as for Balancer. It's an expanding token supply, and the major cryptocurrencies just outperform this asset. And they do this long term because all of that supply, that additional issued supply, hits the market, putting constant selling pressure on the asset. So if we make the relative valuation trade, we can get this performance relatively constantly. And so here's the price for a month. It's currently $125 US. Again, if you don't make any money in your first month with that trade that I'm sharing with you after you join, you will get that money back. Just message me and I will just refund you, no questions asked. If you want to become part of the next copy trading capital pool, then you might consider joining for the annual membership as well. This is where I share the automated copy trading first. So besides that early access to copy trading, you of course also save some money, $250 per year. If it's your first time here on this channel, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers!